Testing. What's going on, people? How do I see my chat? Studio mode. Please drop a comment if you can. Yeah, please drop a comment if you can, people. If you can hear me, all right. In the chat, but I think we should be all right. Hello. Right, we're gonna be. Let me let the Discord know. I don't. If anyone knows how to run Discord, by the way, like if anyone knows how to make Discord servers active, drop me a message in Discord, cause I don't know why my Discord server's so dead. South Africa, wow, that's incredible. Welcome. Alright, that should be fine. Let me just let the server know. Then we'll get started. Cool. So, yeah, this week was alright in terms of its delivery. A pretty classic week in terms of high, low, pull back into the range. Very classic. We do need to pay attention to opening prices a little bit more, and we can also study how when we pull back into the range, you see how we close at the 50% level of the range. This is very typical price action. So there's a few things we can look at. This is dollar right now, but we're going to go on to GBP to backtest. But in terms of its delivery, my point is it's very clean. We had quite a lot of consolidation Thursday and Friday, but that just means that moving into next week, we're probably going to start to see a lot more expansion. I do like the way, I'll probably talk more on this in my weekly review, which will be out tomorrow, but I do like the way that we're kind of avoiding taking out these lows. So if we take a look here, we look at this order block, this is kind of keeping things, you see how we're failing to drop down into this range? There's a small gap right here, which has already been traded into, but I'll show you what I mean. Here. Really, actually, it's this order block, isn't it? Yeah. So this is the order block which is keeping things supported. And just seeing the way that price is it's refusing to drop lower is very supportive of us wanting to see higher prices. Now, if you've been watching me the last few weeks, you'll know that I've been wanting to see dollar reach up into this premium quite a bit. Right, yeah, let's check quite a bit, just because I'm convinced that we should be able to fill this imbalance right here. So this is the top of the imbalance, and then I just marked out this range because this is the top of the bearish order block. So let's mark that out. I will talk more on this in my weekly review. We will get into the back testing, but I just want to show you a few things. So this is a weekly bearish order block, right center that, and then this is the top of a fair value gap. So it's a weekly FUG high. Ooh. We can center that. And then now when we drop down to the lower time frames, you can see where I'm expecting price to want to draw to and where I'm expecting price. These are two significant PD arrays that I'd expect price to have a strong reaction away from. And then, as I was saying, seeing the way that price is being held, and this kind of expansion is very indicative of that. And then what we can also do is we can add, what's your reason to trade currencies or equity? You know what? I just don't spend the time in the indices. I will take a look in them. I do intend to. I'm just lazy, and I'm just so used to, GBP, that when it comes to looking at other pairs and equities, I feel like I'm stepping into just more uncharted territory. Basically, it's like, yeah. But here's what I was talking about. So we can see significant divergence here. We have I cleared the charts? I hope not. So we have this low. You see how we failed to take out this low here, but then on pound we also failed to take out this low here, this high, sorry. So these two are in sync. Let's make them red, and then we'll make euro the one that's accumulating stops. So euro's the odd one out here, and you'll find that euro will probably have to catch up because of that. So when we see divergence like this on a higher time frame, on a 4 hour, and technically it's on the daily as well, isn't it? Right here, when you see divergence on this level, it makes longer term directional bias easier in general. So that's just something to take into consideration. But we'll talk more on that tomorrow in the weekly review. Let's go to GBP and let's do some back testing off this week. I do need to set up the actually I don't even need to set up the charts, they're pretty much done. Let's just get rid of everything that we don't want. And what I will do is I'll mark out any daily PD arrays that were significant this week. So we don't need that anymore. Let me see. Where was Monday? Here. Tuesday and Wednesday. There's not really much to go off here. We'll go 4 hour. Then we have this bearish order block, which is significant. And then the reason I'm marking this out is because when we drop down to the lower time frames, so the 5 minute and 1 minute, you'll see how price attacks these levels and this rejection block level. Rejection blocks are always pretty hard to anticipate. I don't really use them as much anymore. But nonetheless, yeah, let's go to the 1 minute and take a look. And I keep forgetting I need to get this premium. Anyway, so Asia range, this is how I usually do it. If you watch backtesting videos before, you'll know this is how I usually do it. So my Asian range I always mark out in purple, and then we also have the London session from 2 until 5 with an expected expansion around 3 till 3:30. And then we have the New York session from 7 until 10. And then there's 10 till 12 for London close, but I rarely ever trade that. I usually make that this color, and then it just repeats itself. So what I'll do is I'll just copy that over, delete, and then struggling here, guys, apologies. Copy that over, and we'll copy this over. So the first thing I do, you'll see that we have the Sunday open. That's not even the Sunday open price. That's interesting. Oh, yeah, it is. Price dropped. And we want to look at that Sunday range because price will use this as a barometer. And price generally needs to take out both sides of the Sunday opening price. So Sunday range, what am I talking about? Of the Asia range, price needs to take out both sides of the Asia range. So here's the high of the Asia range and here's the low of the Asia range, and you'll see how we attack the lows first and then towards the end of the day we target the top. Now we don't reach the top until 5 p.m. mind you, so again, getting in a trade for this long period, not ideal if you want to be day trading, but generally speaking that's what we'd expect. And then we also have the 50% level and everything that we can use to help us with delivery, because you can see how it finds support at certain levels, such as here. So we'll dash that. And the thing about days like this, when you see how it's taken 7 till 7, it's taken 12 hours to get from A to B. When it takes its time like that, you don't really want to be hanging around in the trades. But let's just break down price as we normally would and just do some classic backtesting. So 8 o'clock is usually when there's a setup in the Asia range. I don't trade the Asia range ever, but 8 p.m, 9 p.m. is when you're looking for a setup, generally speaking. And you can see you on that forms here, so you can see we run stops here. So we take out buy side liquidity, and then you can see our price drops aggressively after 8, coming into 8:30, and then you can see we retrace into a fair value gap and this breaker. So I'm looking at, to be honest, this would be a nice breaker, but you can see price doesn't even manage to reach that, which is interesting because it trades into this one. And to be honest, and when price fails to trade into a significant swing low like that, it just shows more weakness, because it's like saying, okay, it can't even reach up there. So we can use this as a breaker still, nonetheless. Why? Because we've got a high, we've got a low, we've got a higher high, and the time in which we took out this high was after 8 o'clock. So this is where time becomes important. And then we have a break. So let's do some imaginary trading. Look at the last down close candle, pull that through, let's make it orange, and I'm going to call this a breaker. Now this wouldn't be a breaker if we made this high, before that 8 o'clock. So let's say 8 o'clock was here, ignore this, but let's say 8 o'clock was here, this would now be invalid as a breaker. But because we took out that high after 8 o'clock, and this is why time's so important and why ICT preaches it, we then look for the last low before that high, and you can see our price retraces into it. And I think, to be honest, I'm kind of like discovering this now, but I think that explains why we're using this as a breaker and why price can sometimes fail on this breaker, because this is after the 8 o'clock candle. But we'll study this a little bit more before I go and preach this as a concept in itself. But generally speaking, I know that around 8 o'clock is when we're expecting expansion. So nonetheless, run and buy stops, high, low, higher, high, displacement to the downside, closing below it. We pull back into a fair value gap right here. Look at how price trades to the 50% level and also inside of a breaker. So this would be a optimal sell opportunity. I know it seems silly. Backtesting like this, but this is how you train your eyes to, understand when you should be looking for certain setups by actually physically marking out where you'd want to go short. Just like here, so then we continue lower. Let's say we missed that. There's another pullback where fair value gap right here. And this is the breaker, high, low, high, high. Yes, it's, away from here, but my point is, it's like a measuring gap. It's a point of reference that we're referring back to. So we can go short there the same way because it's coupled with a breaker. And then where would we be targeting? Now this is where you'd need past data for it to be, relevant almost. But generally speaking, let's say we got in on this position. To be honest, if I'm holding on to a position and I saw this much expansion, I'd probably get out below any kind of low which I see in the back. Let's see if we can find any. Yeah, see, we'd have to go so far back. Let me take a look. I didn't really want to do all this because you can see how messy it gets. Did this low. There's probably fair value gaps over here from a very long time ago. Not ideal. Not ideal. Anyway, in terms of setup, so that's what I'm looking for. Like, that's where I'd be entering. That's the type of model I'd see. And then I'd aim for some kind of significant swing low. Or you can do a measuring. So what you do is you look at the range for the breaker, and then you get your Fibonacci and you cast it down. What is it? It's standard deviation. And then you can see -1 and -2 level. And what you'll find is that price will at least go to the -2 level. So this is another way that you can measure where to get out of your position. So let's say I didn't know where I wanted to see it fall to. We could use this as the first level, and then and then leave some of our position on, and then I'd simply look at level 4 and look at how price runs for these. Look at how price attacks these levels on the standard deviation from this breaker. To be honest, I haven't used standard deviations like that in a very long time, and I probably should, because it does help when you're in a position. It helps give you that confidence to hold on and to, you know, get to that finish line almost. And you remember, we're just trying to get the lines portion. We don't need everything perfect, even though, yeah. So let's get out of some of our position here. -2. And you can see price continues, and we close our full position as we attack this low. Now, in the new day, this is where the Asia range becomes more useful. So first of all, let's get that Monday opening price marked out. Then let us IC's recently been speaking about this opening range between 12 and 12:30. Let's see how we can apply that. I've never used it before, but in his recent videos he's been talking about it a lot. So what I'm going to do is I'm going to draw a range between the high and low between 12 and 12:30, and we're going to see how price treats this range when we get to that London session, because I can imagine that price is using it as support and resistance, and it looks like it. So let's empty the inside of this box. I'll make this black. So we know that now that this is the opening range. We've got the midpoint in it as well. This is going to look very complicated. And then we don't want to trade. We don't trade London session until 3 o'clock when we expect to set up. So let's go to 3 o'clock. Make it dash, make it orange. And now this is where I'd be waiting for my setup, and I can already see it right here. So let's see what's happened. Price has dropped lower. It's taken out the Asia range low. Now, if it's taken out that low and I started seeing expansion like this, I would probably start aiming for the high of the Asia range. But considering how large that range is, you can see we only get to the 50% level, but we still run the stops. So this is something interesting. I guess when you have a large Asia range like this, of this size, 50% is to aim for as opposed to the high. Because don't get me wrong, we do get to the high eventually, as we'll see later on in the day. But it's looking to me like, it's targeted the 50% level because of how large this Asia range was in this situation. So anyway, we're waiting for 3:30, and then 3 o'clock happens. We've found support on top of that on top of the Monday opening range after seeing expansion. And then here's a fair value gap, and you see how price drops into it. Now, don't get me wrong, this kind of price action is back and forth, not ideal. This would drive me insane. Like, don't get me wrong, I would not be confident trading this, I'll be honest. But again, we can only learn. So let's get this all marked out. I'm going to get rid of these 50% levels. And then ideally this would be where I'd want to go long. And then we can acknowledge things like this, like so how we found support in the bullish order block here. And then this is a mitigation block. We've got a low, we've got a high, we've got a higher low, and then we've got expansion. So this is the mitigation when price drops into it here. And then, like I said, we see a willingness to want to go higher. And another thing is that we're closing, but I think this is where this opening range can help us, because considering we're trading strongly above it and we're closed above it, we should now expect that price should need to drop back below it until it's done its due diligence, so to speak, up here. And anyway, so we go long, and then where can we target? Well, we've got some relatively equal highs here, here, and here. These are pretty much relatively equal, so we can target that for buy side liquidity. And then you can see that we also have this buy side liquidity up here as well, so we can let out our positions over here. Again, easier said than done, guys, I know, but this is how I backtest. And then you can see we get a reversal at 3:30. There should be another setup, but I'm not gonna get too into it. But you can see after we ran those stops at the 50% level, we have a break in market structure where right here, and you can see there's another fair value gap, and this will be the ideal selling opportunity on right here. So let's get that marked out. Stop loss probably above this midpoint, and then at that point I'd be expecting our lows that we created to get taken. And it's interesting to see how we get to the bottom. It's interesting to see how we get to the bottom of this opening range, pull back, look at how price respects the top of it, and then we leave it. Let's see how it treats it for the entire day though. Again, this is a concept which I'm only studying now. So there's stops below there. Excuse me. Let off some of the position down here. And then we have a continuation below here. Cool. So let's take a look at the New York session. And then 8 o'clock's usually our setup, when our setup forms for New York. And you can see at 8 price drops. Now, if we want to see higher prices, seeing price drop is good because it means that it's going down to do what? Accumulate stops. So we can look into here. You can see we drop down into this fair value gap, more specifically here. And then we also have a breaker. We have some stops below here which get grabbed at 7 o'clock. So that means we look for the last up close candle before the down moves. We've got a low, high, low, low, expansion. And then price drops at 8 o'clock. So we want to look for the last swing, which is right here and here. And you can see how that lines up with that. So that's a breaker. And you can see how price drops into that. Go long. Stop loss where? Below this order block. And then where do you want to let off your stops? Like I said, you'd usually target the other. If the other side of the Asian range hasn't been taken, I'd target that. But if this is a large Asian range, and this will be, remember it's 12 hours to hold onto that position, and that is not ideal whatsoever. So I'll probably look at this buy side liquidity as a target. And this is very high resistance delivery as well. So it's not ideal, but it still gets there eventually. And then you can see how price is treating this opening range, not ideal. And then usually between 8:30 and 9:30, there's heavy consolidation, usually a retracement, and you can see that happening here. So if we go to 8:30, pretty much at the top of the expansion, and then to 9:30 here, and would you look at that, we have that retracement. This is typical. You should definitely go and study this. Price between 8:30 and 9:30 will retrace and consolidate, and then you'll either get a continuation between 10 o'clock onwards, or price will simply reverse. In this case, we're having a continuation. It's just not delivering in the cleanest of manners. But in a dream world, I'd exit my position over here. Over here, excuse me. And then we had, I don't know if we had high impact news or what happened. I remember this happening. I was quite unsure, but you see a price just jumps and eventually takes out the high and finds support on top of the high of the Asian range, which is what I was talking about earlier. So that's everything for that day. Let's take a look at the next Asia range, do the same thing. And this looks like a day where the Asian range is doing what it should do. So we mark out the high of the Asia range. and we mark out the low. See, this is I like days like this because they're very easy to trade the London session on. It's just how do you anticipate them? I guess that's just back testing and knowing what to look for. So the day starts. We wait for what time? 3 o'clock for setup. Now as 3 o'clock approaches, you can see that we're in an uptrend, which is fine. And also there's likely divergence at this point. In fact, let's take a look and see if we can find divergence. Yeah. So you see how dollar's taking out the low, but the pairs are failing to take out the highs here. This is indicative of lower pricing. So what does that mean? So let's say we go long at 3 o'clock. Why are we going long at 3 o'clock? Because 3 o'clock is when we expect our setup to form. And voila, our setup is here. We go long. Where do we want to let off our stops? Where are there relative equal highs? This high and this high. So we mark out that as buy side liquidity. And then we want to let off our position once we get above that. So this is a short trade, but you know, it's still a decent trade and it's safe. And you can, like I said, this is why you need to do partials, because you can always leave some on if you think it's going to go higher. So let's say we get out there, that would be ideal for me. And then I'll be looking to see, are we going to take out this high? Now, obviously, based on my daily reviews, I'll have a bias of wanting to see a up close day or a down close day, right? So based off whether you want to see an up close day or down close day, you're expecting the high of the day to be made within the London session. So it is possible we're going to take out these highs, but we also need to consider that, okay, it could just fill this imbalance, and you can see that's what happens. But this is where the divergence comes in. So we'll go $1 and we'll look at the same lows, and we'll see as price is trading up into this fair value gap on pound, you'll see dollar dropping below this low and then reversing. And then when you see that, you know, okay, well, it looks like we're going to see a failure swing here, as in it's failed to take out this high. Dollar's accumulated stops, so dollar's probably going to trade higher with the backing of wanting to see higher prices on dollar, you know. And then we're going to wait for the displacement. Now 330 is usually when you see another setup form. I think, yeah, 330. So we can also mark out 330. And you hear me saying all these times and stuff. The reason I'm preaching about these times is because, one, ICT preaches about it all the time, and two, because you can see it. I've just shown you 2 days in a row where 3 o'clock there's been a setup. It's just knowing and having a bias, like when you have a daily bias anyway. Like if I know I want to see a down close day, I want to see the high get made in London, period. If it doesn't, it's not the end of the world, and it doesn't have to do it. It's just ideal that it does, and then when it's peaked, you can then start looking for yourselves for the rest of the day. But again, easier said than done, guys. So anyway, we've got a high, we've got a low, we've got a high. We have a break here, and then we have a breakaway gap. Now, this isn't a breaking structure to me. The breaking structure for me is as soon as this candle closes here, that's my breaking structure. So let's get that marked out. And I'm going to call this break BOS, break off structure. And guys, if you have any questions, whatever, do drop comments. Like, I understand this is I understand how easy this is. I'm making it sound and stuff, but I do want to appreciate it's not like yeah. I'm not going to be looking at Euro today, but I will have a weekly review out tomorrow, and I will be looking at Euro then. So yeah, what's happening? I don't see a break of structure until this closes. This is a breakaway gap. Why? Because it's been left open. You see how this fails to trade into that? That's another signature to me that price doesn't need to go and probably won't go back up there. So I just call that a breakaway gap. And then we get the break of market structure. And then after this happens, now I'm looking, okay, when can price retrace into a fair value gap or into the breaker? Where is the breaker? Well, technically here, high, low, higher, high, displacement, right? But we don't even return to this. But we have this one down here. So we have some large expansion, and then price comes back and fills in its range up to here. But another thing to take into account is that as we're expanding lower, we're expanding back inside the Asia range. So there's a few things now that are coming into play. Let's make a list, just so that you can like see what I mean when I'm, let me see. So what's the first thing? We should have a bias of whether we want to see up close day or down close day. So we have our daily bias, and we want to see a down close day, which means we want to see the high get made in London. Let's shrink this. How do I shrink this? And then we have the divergence with dollar and support from pound, from euro, because euro is also failing, so it's a failure swing. Then we have the fact that we've taken out the Asia range highs in London, so we should target Asia lows. Now this is like a dream day. Not every day plays out like this, but these are behaviors which are common. Yeah, so these are pretty much what I'm looking at as to why I'd be comfortable to be looking for shorts as we drop back into the Asia range. Once we're back inside the Asia range, so look, as soon as we come down here, we're back inside of it. I don't want to see price leave it again. It shouldn't be able to. It's like a buffer. It's a buffer for price, as in once it's in there, it shouldn't be able to leave it. If it does, you're on the wrong side, or it's going to consolidate, or you don't want to be involved. But when you see it do things like this, when it drops into the Asia range, remember this is the Asia range high. This was the high made in Asia. And you see how it pretty much touches the top and then continues. It's failing to get back above. So anyway, these are what I'm looking at. And then we have us trade up into the fair value gap right here. Yes, we spike above it, no worries there, because our stop loss, where should it be? Above the last bearish order block, up there. So let's go short here as we trade into the fair value gap. So this is the first candle that trades up into it. Might want to go short there. And then we also have this breaker, high, low, higher, high, which we're trading through, and we've broken through it. So you see how we broke through that? That makes this a breaker. You can look at this range as a whole if you wanted to. Price should be able to stay pretty comfortably within it. And it's okay, it's safe to short within breakers. And then stop loss there, and then that's when I would target the Asia range lows. That would be my first target for sure. So then we get out below here, and I do have trade videos on my channel of me doing this, so it's not like it's not doable. And then another thing to take note of is this is that Monday open. Is that Monday opening? No, this is that Sunday opening price, even better. So once we aggressively drop, and there's a few entry opportunities here, but once we look how we drop, once we're below that Sunday opening price, look how we touch it, price trades back up. Look at the volume, touch it, spike, 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 fair value gap. Look where we're trading to in the fair value gap, 50%. Go short at that, because the Sunday opening price is very good for. It's like an inversion fair value gap. It's just as strong as a fair value gap in that price will use it for support and resistance, as you can see here, and then price continues lower, and then we get out below the Asia range lows. So that's a classic day. That's a classic London trade. That's a classic London setup where we take out the Asia highs and then trade on lower. And you can see when the setups are forming. 3 o'clock, and we rally in the opposite direction to what the rest of the day is going to expand, which is fine. And then we have our setup after 3:30, which is when ICT suggests. But there's also a setup at 8. It's 3. It's similar to New York session when you have the setup at 8 and 8:30. Usually between 7 and 8, you want to see price run in the opposite direction to what it's going to run for the rest of the day, and we will take a look at that now. Even though this is not, this is not a nice day to trade. You see, when I see price action like this, I don't even think it's worth back testing it. Look at that, because you can see we're just range bound, and you don't really want to be involved. Don't get me wrong, you might place a trade, but you'll know pretty quickly if price is going to move or not, because when you get in a position, it should take about 15 minutes and you should start seeing movement. If you're in a position and it's not moving like this, you don't really want to be involved. This is not, yeah, this is consolidation. But with that in mind, that means that it'll probably use that consolidation at a later point in the week, as support or resistance. And you see that right here. Look at the next day. What do we use that same consolidation as? Support. And then it sends price higher. But we'll get into that. It's all connected, guys. And when you study it really, really deeply, like what we're doing now, and just seeing the way that it's behaving, you realize that. Do drop a comment if you're following me right now. Yeah, let's talk about this London close, though. There is a setup here. So we're consolidating all between 7 and 10. Not ideal. At what point, if you wanted to still trade this, would you get in? Honestly, I don't know. This is not. Because even if we started rallying like this, I wouldn't trust that it's going to continue higher. But it's interesting to see how we're treating this Sunday opening price, nonetheless. You know. So let's go to the new day. I'm going to keep this consolidation drawn out. You know what? From now on, whenever there's a heavy consolidation during a session, such as the New York session like this, I'm going to drag it out into the new day or for the rest of the week, because it's likely that if price isn't using it that day, it will use it later, like what we're witnessing right here. Because price always returns to consolidation. It's the root. That's the root. That's where they're accumulating. So smart money, allegedly, this is according to ICT, would be buying during this period. They're buying, knowing full well that they can offset their positions in the new day above what relative equal highs that haven't been tagged yet. And then, you know, they're engineering in that liquidity, and it's grab stops. So they buy here, buy one more time, like an algorithm, and then offset. Yeah, so let's take a look. Same thing again happens here with the Asia range, but the opposite. So remember, I said both sides of the Asia range needs to be taken. Last time, as in on the Tuesday we studied, no, the Monday, what? I'm so confused. No, the Tuesday we studied, my bad. We took out the high, and then we traded lower. On the Wednesday, we take out the low, as you'll see, and then we trade on higher. So the same thing's happening, it's just opposite depending on the point of the week, the point after the week that we're at. And yeah, so let's get these Asia range marked out. There's the high, there's the low. 8 o'clock setup, classic. I'm just showing you this so you can see how repetitive this stuff really is. 8 o'clock, what is there? Setup. We rally, what? Above relative equal highs, and then continue lower. If you want to look at 8:30, there's probably going to be another setup. Now, that's what I mean, heavy consolidation, but nonetheless, price trades to create the low of the Asia session. But Asia sessions generally are just consolidation, and you can see that here. Creates a range. We did have high impact news at 2 a.m. And even here, you can see both sides of the Asia range being tagged. But volume-wise, we drop lower. You know what? Let's look at this. I keep forgetting. In fact, I do want to study this opening range that ICT speaks of a little bit more. So here's yesterday's. We didn't look at it on this day. Watching from Kashmir. Wow. Pakistan. Is that right? That is right, isn't it? Is that Asia? Yeah. It's interesting. You see, with the ICT, he'll keep adding more and more concepts, and then it's like you really don't want to overcomplicate and oversimplify. So although I'm showing you all of this, you don't see me do this on my daily reviews, and you'll notice I don't necessarily do this when I'm trading, but I probably should, because it'll probably make my trades a lot more clean. As in, like, I'll be a lot more understanding. But when I'm really locked in, I will do all this, and I will look closely, and make these lists and understand why my biases are there. In fact, that's probably a good idea. From now on, whenever I place a trade, I'm going to try and make a list of at least 3 things as to why I'm going long or why I'm going short, and that way, at least when it goes opposite, I can study why and figure out where I went wrong. But nonetheless, let's take a look at how we approach this Asia range. We take out the lows, classic, we find support on yesterday's consolidation. This is new to me, by the way, like, this idea of using previous consolidations. But we saw our consolidated New York session, not tradable, but it gets used the next day. So we find support here. So when we see the support getting found, are we confused? No. Why? Because we knew already it's going to find support at some point of consolidation. We're assuming that we know we want to see it up close or down close day, because that's what my daily reviews pretty much do. I usually call a bias, and I want to see certain play out. When's our setup? 3 o'clock. So let's go to 3. Now, don't get me wrong, that doesn't mean you can't trade before 3. It's just at 3 o'clock, there tends to be an obvious setup. And you can see here, in this case, there's a reversal that forms. But let's say you wanted to get in earlier, especially considering we had high impact news. You see expansion into the Asia range. We have, what do you call it? Mitigation, low, high, higher, low, willingness to go higher. You could go long because we're inside the Asia range, but there's not really a setup, so to speak. But let's say we want to trade after 3, because remember, if I'm preaching this, let's what do you call it? Practice what we preach. So we wait till 3. Do we have displacement? Yeah. Where? Here. And when I say displacement, displacement's one of those things. It's hard to describe. I can't describe what it looks like, but you can feel it. Look at the way that price is closed below this candle. Look at how tough it is. Look at the failure to take out the high it's created. There's certain things, and then fair value gaps, the way we're filling them. It's staying very much within the range. Again, this I like the look of this. When I see this, this kind of displacement, beautiful. So now I'm just waiting for a fair value gap opportunity. So here's the first one, because we trade back up into it so that we can go short. Easier said than done, guys. I'm not a god, and I'm not a millionaire, so we're all learning here. And then fair value gap here as well. But I'd want to go short inside of that. Stop loss where? Above bearish order block, which is here, which we do trade very close into. Not ideal, but the wicks do the damage. And then where do we want to offset our position? Well, again, you want to start looking for targets in terms of lows. So we've got this low here. We've got this low here. To be honest, in this position, I would probably look at this low and want to target here. But if I want to see up close day, I wouldn't need to think about that. So there's different ways we can target. This isn't the cleanest of trades, just because you can see we get into quite a bit of a pickle here. But what's interesting is we do trade to the 50% level of the Asia range. Voila, right there. So there is some there's what's the word? Logic to the madness, beauty to the. There's a saying, method to the madness. There's method to the madness, and we trade right to the 50% level, and then we find support at that level, which also happens to be a swing here as well. So let's say, because I wouldn't aim for the Asia range lows at this point. Why? Because we've already taken it out here. So as far as I'm concerned, price doesn't need to go back down there again, especially if it's found support on a strong consolidation from yesterday, which I just spoke about. So this seems logical to me. And also I'd be looking at this low first, and then I'd be looking at this low, and then I'd probably be looking at this low. But like I said, this is outside of the Asia range, so by then I wouldn't want to be in my position anyway. So we get out there, cool. What's interesting as well, I haven't spoken about this in this back testing session. The same, I treat the Asia. It's weird because the way we treat the Asia range, we can treat the London range, we can treat the New York range, we can treat any range. And that's what makes trading so difficult, because it's like, oh, what range to use and such, and I hear it. Because you'll see the same thing in terms of both sides of the range being taken out here between 5 a.m. and 7 a.m. As in, if we look at the low of here and we look at the high of here, and if you study this, you'll see how most days New York will aim for the low of this range and then target the high, or vice versa. It will take the high out and then take out the low. What I do like to see in a London session, in a New York session, and this is an example of that, I like to see between 7 and 8. I like to see price go in the opposite direction to what it's going to expand. What do we have here? 7 to 8. Price is traded lower. Now, at this point, I'd like to think that we'd have a bias, a daily bias, to want to see price go higher. And you can also see that we're finding support at this Sunday opening price as well. So there's a few confluences there. Then, what time is our setup on in New York? 8 o'clock. So we go to 8 o'clock. Do we have a setup? Yes. Bang on time. So you see price drop. Where? Fair value gap. Same thing. I'm just repeating the same thing, guys. Go long. There's a breaker here. We traded into that. Found support. Found support. Here's another I say fair value gap. This is more like a breakaway gap. Then again, actually no. This would be the breakaway gap on the 1 minute. That's the breakaway gap. Here's fair value gap. But we want to trade after 8, don't we? That's when our setups form. So you can see price drops into the fair value gap. Go long. Stop loss below the order block. And then where do we target? Easy trade. You just target the high of that range. You see what I'm saying? This is why I use these ranges the same way now. In this context, I'll probably look for that London high. That took a while. London high as a target. But my point being that highs price, as ICT said, and don't get me wrong, I understand that we expanded aggressively into a fair value gap. We can talk about that. But if we just wanted to get in on a scope, so to speak, then we could go long here and we could easily just let off our position above that high, and that's a trade, you know, a nice easy trade. Or we can target that London high. Yeah, ICT preaches price is going one of two places, either to highs or to fill an imbalance. It's not going anywhere else. Now, you could argue that don't mean anything because everything's a high or an imbalance. Yes, but it's significant swing highs. When you look at this chart, where's the significant swing high? Here. Where's the relative equal highs? Here. So when we're going long, we're looking at these 2 points. We're not looking at here. We're not looking at here. We're looking at the places that stand out. And then this was an imbalance, wasn't it? That if you've been here for the whole session, you'll know that I drew this out earlier just to see how price drew to it. Anyway, price then drops, and then we have a London close reversal. High, low, higher, high. Look at the breaker. Last down close candle. Drag that through, and voila, what do we have? Beautiful breaker right there. Go short. Now, I know there's a macro between 9. There's a thing called macros. I'll keep introducing these things. This is everything I've learned from ICT, by the way. There's a thing called macros between 9:50 and 10 when price will run, and you can see this is an example of it. Was it 10 past 10? Either way, we can start looking at, I've never traded 10 to 12 like that, but I'm guessing, because he says there's a setup like every hour. If 8 o'clock we had a setup, then there's no reason for us not to suspect that 10:30 we should have a setup. And you can see, bang on 10:30, we're trading up into the breaker to go short. Now, this doesn't happen every day, or it's not going to be as clear every day, or as clean, but high time frame. How do you start higher time frame analysis? If you've watched my daily reviews, I always show me breaking it down right from a weekly down to like a 4 hour, or sometimes 1 hour on there. So if you'll see, go watch my daily reviews and you'll see how I break it down. But I'll go through that. What time is it? 40. We're coming to the end of the week now. I'm not really. I'll skip through this and then we can take a look at that if you guys also want that. Make sure to drop a like, by the way. It does all help. Anyway, yeah, set up 10:30. That's something I can study. Where do we drop below? Back below these significant lows. Why is it significant? Because we took it out earlier and we know that this range can be used as targeting. And then we just take out this low and then back into that 50% of this Asia session. Here we are on Thursday. I'm not going to do Friday. Friday was a mess. Yeah, I'm not going to do Friday. Just because Friday was disgusting. I didn't. You know what? If you watched yesterday's video, you remember me saying I don't expect Friday to be moving much, and it didn't. It was very, very, very. Yeah, I'll show you. It was very consolidated, as in look at how range bound we are. But remember what I just showed you. What happens when we have consolidation? It's going to be used later. So we can look at this range moving into the new week, and price will likely use this to, bounce about and get to where it needs to get to. But here's another example of where both sides of the Asia session gets taken. Now, this is the fourth time I'm showing you this now. The fourth time. So you've seen it now. There's no excuses for you not to be able to go in the charts and recognize this is a pattern, this happens repeatedly, and that this is algorithmic. Price takes out the low of the Asia range, uses it as resistance, and then what happens? We target the high of the Asia range by the end of the day. Now, it doesn't necessarily happen by the end of the day. You've seen it happen in the space of 3 hours between 2 and 5. Or it can happen in the space of London session and New York, where London might take out the high, and then New York takes out the low. Or you can clearly see here, you see it when it takes the whole day to take out the high. So, but the point is, the Asia range is really important. But let's take a closer look. So same thing. Let's look at the Monday opening might as well. Should we look at this Asia? Should we look at nah. So when do we want to trade? Does anyone remember? 3 o'clock. Look for your setup. And you'll see price rallies, takes out stops. Tiny, let's make this orange because it's going to drive me insane. Tiny imbalance right here. Price taps into it, and then what happens? It drops off. Where is it trading to? Well, we have a nice relative equal lows below here. So that's a nice little scalp, little short. Get out your position down there. Excuse me. Buy back the position there. And then there's also this low below here and these lows as well. So, and you know what's interesting? You see, okay, so it gets more complicated, but you don't need to worry too much about this. But there are times where if Asia range high or low is left untouched for the day, so let's say we didn't take out this high, price can easily go and use that as liquidity later on in the week for price to take it. Now, an example of this, okay, yeah, we're taking out both sides, but you see how we reused this range when we dropped down here? These highs are still relevant. There's been days, and I think even this week it happened, and I'll talk about it. There's days when a certain high gets taken, and the price will wick above it, but price will still want to accumulate more stops above there, as in price will still run to it, so we can still use it as a high. I'll show you after what I'm talking about. But nonetheless, price comes down and takes back out that Asia low, which is quite interesting. Even though, yes, we took it out here, my point is it can still be used. And it's like, oh, I understand it's confusing. It's like, oh, this could be unlimited. Like, you could drag that right through the whole year. Yes, you could. You could draw this all out for the whole year. And you'll see how price runs between these. But that's the story for another day. Let's just appreciate what we're learning here. Drops down. Disgusting consolidation. 4 o'clock, we have continuation. This is very typical as well. So similar to how I was saying earlier, that between 8:30 and 9 o'clock to 9:30, there can be a heavy consolidation. That's happening here. Between 3:30 and 4, we have consolidation, and then 4 runs the stops, and then we get a continuation. Now, knowing these things is useful just because when you're in a position, it allows you to hold on for longer and trust the process, because like there's been times I've entered a trade at 8 o'clock and then it'll get to 9:30 and it'll be in a stupid, ugly, disgusting, nasty consolidation. But because I know and I understand that, okay, price is likely to consolidate during this period, will probably continue after 10 o'clock. I'm able to hold on to it, and then after 10 o'clock, what happens? Price will run and do its thing. So this is all something to consider. But nonetheless, eventually, we get down, take this low. This is, not going to lie, this is not nice price action. It's not very clean. When the minute's looking like this, I don't really like trading it. Again, though, where's our setup? We're looking for 8 o'clock. Is there a setup? I mean, it's not very clean. You can go short in there. But again, would you want to be trading? This is very high resistance. And what I mean by that is that it's really hard and difficult for price to deliver to where it needs to get to. and then we don't really get set up until 10 o'clock. But let's look at that 10:30 time again. Remember, we just learned that today. So let's go to 10:30. Is there a setup? We're back inside what? Back inside the Asia range. What happens? Price drops down, finds support on top of it, go long. But this would, yeah, that would have taken me out. That would take anyone out. Not the best day. See, days like this, I'd probably get chopped up. Unless I got in this trade anywhere else, I probably would have got chopped up unless I managed to go long here or after 8:30. But even then, you can say you can go long at these points, but it's like if you do that, then you got to sit through all this, and it's not fun. It's quite sickening. And that brings us pretty much to the end, where we're just at this date, this Friday. I didn't even look at the charts. I don't even want to know. So I'm gonna get rid of that. But yeah, let's take a look at high time frame from top to bottom, since we got Mr. Man asking. Let's go to Euro. I do this every day though. I don't see why. But anyway. And you can see how fickle. Look at how fickle. Since November, price has been very high resistance. So these aren't easy trading conditions, guys. Just keep that in mind. But generally, you go on the top time frame, you mark out all PD arrays that price could refer to. So we have a fair value gap down here that price may want to trade down into. And then in terms of premium PD arrays, I'd be looking for wicks and any kind of fair value gaps in the premium. Now, there's not really much, but something to consider is the fact that we've just traded into the 50% level of this wick. So that's something to consider, and that means that, and then we also have this, well, it's not a bearish order block just yet, but we also have this high that we've just ran. And then I'd simply go down to the 4 hour, and then I'll do the same thing. We're looking for PD arrays. What do we have? Well, we have a bearish order block right here. So as far as I'm concerned, price needs to get above that. Then we have relative equal lows below this low, this low, this low. South side liquidity. And then we also have an imbalance down here. But because we're working from the daily, right now I'm only focused on this. So let's go to the 1 hour. Same thing, any imbalance. Technically there's a gap here, but I don't want to make things complicated, so let's not talk about that. But there is a bullish order block within it, so we can draw that out. And then the 15-minute, and you'll see there's a beautiful fair value gap right here. So now we have a target on Euro as to where we want to see price trade to, and we also have the very highest we'd expect price to trade. Why? Because this is that bearish order block, remember, from the 4 hour. Price shouldn't be able to get back above it. But now that we're on the lower time frames, we can look at little things like this. When you see a high taken like that and continuation lower, price shouldn't, this is like classic. This is classic, as in like, this is beautiful to me, because I now know price shouldn't be able to get back above. If price breaks that high, it's going to run. It'll do it aggressively, and that's a change in state of delivery. And this is like one of those signatures to me. A bit like, we look at these relative equal highs, look at how price ran these stops. You know, it's the little things. And then 5 minutes, and you can just look for the same kind of processes, as in, we have this bearish order block, tapped into it. And then you can see we're currently in this order block, but when we're not getting a reaction from a bullish order block, it's probably not very relevant. And then we have these lows below here as well, so we can start thinking. Do you know, that's pretty much how I do it, but easier said than done. What time is it? 52, so we've been going for an hour now. I think I'm going to finish up. Was there anything I wanted to look at? Is there anything we should look at? I did want to see what the indices were doing. I haven't looked at these in a while, in all fairness. Oh dear. You see, things like this, don't even know if I want to be involved. See what gold's up to. Bitcoin. Wow. But yeah, man, that's gonna be everything, guys. thank you all for watching. Don't forget to drop a like, drop a comment, whatever. And yeah, I'll catch you guys tomorrow. Thanks so much for watching. Peace.